As the financial world digitizes, there's a number of opportunities for investors investing in companies who don't have the same physical infrastructure that a lot of traditional banks and brokerages have. These are companies that are building real estate all over the world. They're hiring thousands of people to just be a face to their customers. But is any of that needed in a digital financial world? And I think the answer is no in a lot of cases. And there are some companies who are doing a really nice job growing on the back of a digital app native financial experience. One of those companies is Robinhood. And I love the company's financial momentum, but there's one chart that really shows the company maturing from this YOLO trading days of the pandemic. That's when the company really made its name, to being a much more mature company. I have a retirement account in Robinhood, and I actually find, and now they're pushing more and more into their gold subscription. So it really changes the business model, but the trends are really great. So I want to dig into the one number that I think really changed my mind about Robinhood. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's look at some of the trends to start with. Let's just start with the most important chart, because if you take anything from this video, it should be this. What you're seeing here is in green, the total assets under custody for Robinhood. So this is all of their financial assets, stocks, crypto, all of the things that they hold for customers. And then the blue column is the number of monthly active users. Now this is active users, this is not necessarily the number of customers, but pretty good proxy for the number of people who are actually using the platform. What's important here is that the green column, the assets, have actually gone up as the number of users have kind of gone down a little bit since those go-go days of the pandemic. And the reason that this is a good thing is because users now have more assets on the platform than they ever have before. If you just divided assets under management divided by the monthly active users, you get $4,700 in 2021, and that is nearly doubled to $9,460 today. Now, that's not a perfect measurement, but I think it's a good proxy for the amount of assets that each customer has on the platform. That means that Robinhood is moving toward a more affluent customer base. They're moving to customers who are using products that are going to be a little bit stickier, Roth IRAs, things like that. So these are really strong signs for the business. And there's another thing to really be bullish about, and that's their gold program. Their gold program is a monthly subscription that you pay. You get a number of benefits from it. But one thing that those benefits do, the 1% back that you get moving a brokerage account to Robinhood, you can get incentives for putting money into a Roth IRA. But you have to keep your assets on the platform for a certain period of time to be able to keep those benefits. So again, you're moving up market by getting to a more affluent customer base. You're making subscription revenues, and you're making your product stickier. All really good signs for Robinhood. So let's look at some of the operating trends. This is the financial results going through the first quarter of 2024. We don't have financial results since then, although I'll get to some of the operating metrics from April in just a second. You can see that revenues are up really nicely, but the underlying things that we want to keep an eye on are the number of customers. So this is funded customers, assets under custody, deposits. So what are the inflows into the ecosystem? This is going to be, I think, the real critical number for Robinhood over the next few years is, can they keep bringing tens of billions of dollars per quarter into the Robinhood ecosystem? And the number of gold subscribers. I remember I mentioned that gold subscriptions come with a lot of benefits, but it also means that your business model is a little bit stickier. I have compared this to a bit of a Costco model. Robinhood can say, hey, we're going to make a profit on the membership itself, and that $5 to $7 per month that they're generating for membership fees. And then they can actually run the rest of the business at a break-even level. That's something that competitors simply can't do. So this continues to grow really nicely. What you end up with then is, if you can keep your operating costs under control, which they've done a pretty nice job of, you start to get to net income positive and adjusted EBITDA positive. So these numbers are starting to be really solid. And it looks like the numbers are going to continue. Net deposits in April of 2024, $4.9 billion. That's almost a $15 billion quarterly run rate. So that's higher than they had in the first quarter. And funded customers continues to go up as well. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. The real challenge for Robinhood is, how do you value a company like this? Traditionally, banks and brokerages are going to be trading for somewhere around 1x book value. And then you're going to want to see that they're generating a solid return on the book value that they have. Robinhood is in a little bit different situation. They're a digital company, so they don't have the same asset infrastructure as a lot of traditional brokerages and banks. So they can scale the business much more quickly, probably more appropriate to judge them based on revenue growth rate and net income growth rate. So the metrics there are a little bit more appealing. Price to earnings multiple on a trailing basis, remember they just got to profitability, is about 160, but on a forward basis, it's about 47. Now that seems really high, but look at the rapid improvement in the company's revenue growth over the past couple of years and also their operating and net margins. Both of those things should continue to go up as more assets come onto the balance sheet. There's a number of different ways that brokerages can make money by just simply having more assets on the balance sheet. You're going to make more margin loans. You're going to make more money from payment for trading flow, make more money from gold memberships. So just accumulating more assets is going to be the best judge of if Robinhood's strategy continues to work well. And I think everything is pointing in the right direction. Ultimately, I think these gold products are really what's going to differentiate the company. I know that the 3% cashback gold credit card hasn't even rolled out to most customers who are on the waiting list for that product because it was so popular. They're going to, yes, be subsidizing some of the purchases on that because you can't give away a 3% benefit when the revenue coming to the credit card is less than that. So there's going to be subsidies there. But the benefit is you're going to get that gold membership revenue coming in every single month. You're going to get more assets. You're going to get more assets into the ecosystem. You're going to be offering loans to those credit cards. So people who keep balances, and your funding for that is going to be relatively low. So I really love the business model that Robinhood is putting in place. They have a lot more operating leverage and a lot more opportunity to grow than a lot of their brokerage and banking competitors. So just tremendous growth potential for this company. May not be the best valuation, but like I said, it's very hard to value a company like this when it's a more digital company and a lot of your competitors are going to have much more physical infrastructure. So that's going to be a more traditional way to value a company like Robinhood. But I like to look at Robinhood's growth rate. Right now, analysts are expecting 16% annualized growth rate over the next 2 years. I think they can exceed that. So very well-positioned company, and one of the biggest things that shows the company is maturing and getting to a much better place and more stable financial footing is the fact that they're serving more affluent customers and the assets per customer continues to go up. So love the trends for Robinhood. But what do you think? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.